Hi, this is James Sugg at Westpac with our end of day report for Friday, July the 6th. Very much a negative day too in equity markets. In Europe, a range of issues. We had Peugeot, the French car company, announced reduced sales, and that hit their share price fairly sharply and added to the sense that the European economy is slowing. Concerns have emerged about the EU leaders' commitment a week or so ago to directly recapitalise the Spanish banks rather than putting the recapitalisation via the Spanish government, which would have indebted the Spanish sovereign, which would have added to the Spanish sovereign's indebtedness. Now, their commitment to do it directly has hit a few roadblocks, political issues, legal issues. There was a report later denied that the Finns would leave the euro if it were to go ahead. The European Stability Mechanism may not be in place and ready to distribute funds in time for the banks, which need the recapitalisation urgently. And also the Troika, the IMF, EU and ECB officials that are looking into the issue haven't finished their report, and a decision was hopefully going to be made as soon as Monday. So that's hit the Spanish equity market pretty severely. They'll probably still get the bailout, the thinking goes, but it may have to go via a state agency, which would add then to the Spanish government debt. So that's pushed Spanish bond yields up sharply back towards 7% earlier this week, late last week. So that was a big concern. Then we had the US jobs report for the month of June. It showed just an 80,000 increase and unemployment steady at 8.2%. So at the moment what we're seeing is pretty much a mirroring of last year, where we had jobs strength in the first part of the year, first 4 months of the year actually last year. And then 4 months of weakness, relative weakness, sub 100,000 per month. And then it picked up again towards the end of 2011. The issue now, though, is that increasingly analysts, observers are shifting to the Westpac view that there won't be such a pickup in 2012. This is the sort of jobs growth we're going to have to stick with, because the economy, rather than growing at the 3% pace that a lot of American economists and officials in particular have been hoping for and forecasting, it looks like it's going to struggle to grow at a 2% pace. And so day by day we're getting more and more data confirming that, and certainly the jobs numbers, although there was some decent detail in there on earnings, what other figures show is that when households get more earnings, they tend to save it rather than spend it. So that was a big disappointment for the market as well. There was Spanish industrial production figures. They were down in annual terms for the 9th month running. However, there was a bit of a bounce in German industrial production in May. Although even in Germany, compared to last year, IP's flat. There's no growth at all. And that's pretty much what it was doing in the first couple of quarters of the 2008 recession. So yet more evidence that even Germany is probably now in recession. Reduced their global growth forecast. I mean, it was pretty obvious they were going to. Their last figure was 3.5% growth for 2012 for the global economy. That was published in April. Their next number will be published July 16, I think it is. And what Christine Lagarde, the managing director of the IMF, has said is that concerned about the European economy, but also the emerging economies, China, Brazil, and so on. They've already published, in fact, a slower growth forecast for the US. So right around the globe, there's evidence of weaker growth. But even their new lower forecast will depend upon the right policies being put in place. That's an assumption they'll make. And that's a bit of a needle, I think, at the European Central Bank to embark on more support for the bond market in countries like Spain and Italy, which is advice that the IMF has previously given to the ECB. And it's also, I suppose, trying to get the EU leaders who agreed to do various things, including the Spanish bank recapitalisation directly to the banks rather than via the sovereign, to actually ensure that it actually gets followed up. Follow through, delivery of policy, I think is what Lagarde was actually quoted as saying. So all of that has pretty much hit markets quite sharply, and we've got at the heading into the close in Europe, just just after the close. We've got the FTSE in London down around 0.6%. The French market down 1.8%. The Germans, where there's now talk of an investigation there into the banking system related to the LIBOR issue here in the UK and elsewhere. The German market's down 2% today. The Spanish market down more than 3%. That's related to those concerns I just mentioned, and the Italian market down 2.5%. And the Dow in New York, it's down 1.3% at the moment. That's at 12,729. Commodity markets are sharply lower, with oil off 3%, just over 3% today at $84.49 a barrel. Copper's down 2.2% at 341 cents a pound, and gold down 1.4% at $1,586 an ounce. The Aussie dollar's off about a cent today too. It's at 1.019 at the moment against the US dollar, down from just around 1.03 yesterday. Okay, so that's it for today and indeed this week. Week of American jobs, disappointment or concern about Spain, and just generally gloom about the global economy. The main factors driving the market down at the end of the week. Okay, back next week.